Traders, in today's video, we're going to talk about the different entry models for smart money concepts. I'm going to be touching the 4 popular entry models. We have the order block, fair value gap, breaker blocks, and flip zones. And I'm going to break this video into parts. So in today's video, we're going to focus more on order blocks. So make sure you subscribe, turn on the notification bell so that you'll be notified when other videos will drop and be updated. You get the point? So let's go to the chart, guys, and point out valid order blocks together and also how to take smart entries from these order blocks. Let's go to the chart, guys. So traders, let's get to understand the idea behind order block and what it means. So from what I have here on the screen, you can see that an order block is a price zone on the chart where big financial institutions, like banks, hedge funds, etc., placed large buy or sell orders, leaving behind a strong footprint. So having in mind that order block, this is actually, I will call it the most popular entry point for smart money concept strategy, and I use it too. And at the end of this video, I'll get to show you how, I map it out on the chart and, take my entries, things I look out for on the order blocks and the rest. So this is actually an important aspect of smart money concepts. Once you get to understand the idea behind order block and how to strategically map it out, then entries in the market won't be a problem. So make sure you watch to the very end. So why is order block important? Now from here you can see that order blocks are important because they show where the strongest players in the market, institutions, placed their orders. As you are trying to make money with your little capital and the rest, we have the market movers, those that, their orders can, shake everywhere in the market. So that's what we mean by, the institutions, the banks, central banks and the rest. So order block will show where these institutions, placed their orders. And then since these players, they move millions, their footprints become valuable zones for traders. So, and now price often reacts when it returns to an order block, making them strong areas for entries, stop loss placements, and take profit targets. So you can see from the illustration I have here, once there is an order block, we get an impulsive move, and that impulsive move will now break a structure. So the idea will be to wait for price to come back into the order block. If the break of structure was to the upside, we will be looking to buy once price, gets back into that order block. And if the impulsive movement and the break of structure was to the downside, we'll be looking to sell once price, gets into that order block. So it is very important. Now let me quickly show you guys the rules to follow on how to spot valid order blocks. So on how to spot valid order block, I've listed 5 important tips here, and number 1 is the trend matters. It is important for you to know where the market is going to, the market structure, break the market down and know where it is pointing at so that you will align. The popular statement, the trend is your friend. It is important you know where the market is going to so that you will follow suit, because when you are following the trend, the probability of your trade playing out will be very high than when you are going against the trend. And then the last candlestick in an accumulation is actually the order block. So when you are trying to map out your order block, inside a consolidation or accumulation or inside an origin, look out for the last candlestick. That is your order block candlestick. And now the next one here is break of structure. So have it in mind that before you even start looking for your order block candlestick, you must have pointed out a break of structure. Because once you see a break of structure, the next question is, what caused the break of structure? The impulsive move that cleared the structure, where is it coming from? And now, once you point out the accumulation that happened before the impulsive move that caused the break of structure, you now need to look for the last candlestick reaction before the impulsive move. Highlight it because that is your order block candle. And it's important you highlight it very well so that you will not miss out on your entries and the rest, because there are times price will just come and just give it a little tapping and move to your direction. And if you don't highlight it well to place your entries well, you see the market leaving you out, and then you will miss out on trades that would have given you a good massive profit and the rest. So make sure you highlight it well, the last candlestick in an accumulation, and have it in mind that that order block must cause what? A break of structure. And it's also important that you point out imbalance, that is fair value gap, what I have here. It's important you point out imbalance very close to the order block, because that will make the order block more valid. It will be more strong, for you to take trades from that particular order block. Because personally for me, any order block that doesn't have imbalance, I'm not really comfortable with it. I need to see that imbalance present before I will tag that order block as valid. And now liquidity must be present before price will tap into your origin. Make sure that you've been able to map out liquidity that price will clear as it is trying to tap into your origin. Because if there is no liquidity, your origin or your order block will be the liquidity, and then you will see price clearing you out, hitting the stop loss before it will still move to your direction. So make sure there is liquidity, price will clear before it will tap into the order block. So this is a bearish structure and an example of a supply zone, which I've highlighted here. Let me also show you guys the example of a bullish trend, and after that I'll show you guys some of the trades I've been able to catch using order block. Like I stated earlier, this particular entry model, I love it, and then is one of the entry models I use to catch my entries. I use order blocks more to catch my entries. So I'll also show you guys some of the smart setups I've been able to catch using order blocks. This is an example of a bullish order block. You can see from the illustration here, we got a change of character. The next thing you need to look out for is where is the accumulation that happened before the change of character. And now from that accumulation, you do what? You look for the last candlestick reaction before the impulsive move that cleared and caused that change of character or break of structure. That is what you will highlight as your order block. And like I said earlier, your imbalance must be present, which is what I've also mapped out here. It's either imbalance or fair value gap. So that's actually the gap price creates in the market. And it's also one of the entry models which I will be explaining how you can also catch smart setups using imbalance in our next video. So make sure you subscribe and turn on the notification bell. And then liquidity must be present. If there is no liquidity, you are likely going to be the liquidity. So make sure there is liquidity, price will clear before tapping into your order block. Let me show you guys some smart entries I was able to catch using order block entry models. If you can remember the first illustration on how to spot order block, you can see that this is actually the entry. Once the break of structure happens, just highlight it. The only thing you need to do is to patiently wait for price to come and tap into that particular order block and dish out the clean movement. Now you can see how price got there, mitigated the order block, and then moved straight to take profit. Now when trying to put your stop loss and your take profit inside the accumulation, look out for the last week rejection. You put your stop loss a little bit above the last week rejection if you're trying to sell, or below the last week rejection if you're trying to buy. Some people may try to refine, tighten their stop loss, but this is how I place my own stop loss so that I will give the market, some breathing space to dish out good moves, because I wouldn't want price to like tap me out and then dish out the movement when I'm trying to tighten my stop loss. So this is how you wait for it. And I know some traders will be asking, why don't you buy to sell? At the end of the day, you can still be able to catch the correctional move, because any move that is against the trend, you call it the correctional move. So you can still be able to buy to sell depending on the confirmation you've seen. But we are not talking about correctional move today. I just want you to understand how to map out order blocks and how to take smart entries with order block. So once you map it out, following the rules I stated earlier, once you map out the order blocks, all you just need to do is to set your pending order and patiently wait for price to come there, tap you in, and then dish out good results. Make sure you apply proper risk management, because you understand that trading is risky and your capital is at risk. So no matter how clean you think your setup is, you can still lose your money. But at the end of the day, this is a strategy I've tried out. Particularly, you see how it looks. Just this illustration alone is explaining the strategy I use, because most of my trades are always from order blocks. So let me also show you guys another entry. So this is still coming from the bullish order block, that is from the illustration I showed you guys earlier. You can still see how price tapped into the order block and boom, straight to TP. So when you're also trying to set your TP should always be at a point of reversal. That is where the correctional movement started from. That is where you place your TP, because price can come there and retrace almost back to entry. So it's important for you to be very realistic when setting your TP. And you can also see how I placed the stop loss. I always pay attention to the last week rejection inside the accumulation, and my stop loss will just be a little bit below or above the last week rejection. Some traders push it just a little bit below or above the order block, but I consider the last week rejection. So it all depends on the one and how you want to do it for yourself. You just need to do your back testing and make sure you know what you are doing as you are taking your trades. So in our next video, I'll be breaking down how to take entries with the fair value gap. Remember, we are talking about the 4 entry models for smart money concepts, and we've been able to tackle that of order block. This one is pretty much popular. So in our next video, which is the part 2 of this particular video, we'll talk about how to catch smart entries with fair value gap. I'll see you on the next one.